All right, everybody. Today marks a new challenge, and that is we will not stop this live stream until we find A tier stock. Okay? So, without further ado, let's start on the Japanese Company Handbook. And today we are on page 93. Yesterday we looked at trial holdings, and today we're going to look at Sanyo Homes. So, the idea is anytime I get just an inkling that this stock is not A tier, we move on, right? So the goal is to go through turn over as many rocks as possible to find an A tier stock. So let's do that. Sanyo Homes. Okay, let's change the label. I'm just gonna be lazy and do 1420 so that I can, if I need to reject a stock, I can reject it quickly. So, yes. So Sanyo Homes mainly engages in the design and the sale of detached homes, condominiums, in addition to welfare housings for lease. The main territories are the Tokyo area, Chubu, and Kita Kyushu regions, as well as Kinki region, which accounts for about 40% of sales. Also deals in the remodeling of detached houses, condos, management, life support services, the renovation of pre-owned homes. Has achieved the goal of net zero energy houses for all the detached housing, addressing ZEHs also for condos. Made a full-fledged entry into the construction of nursing care facilities, nursery schools, and others. Okay, so let's take a look at the sales. Sales has been quite flat. Expected to resurface to 2021 levels. Operating profit dropped and then has resurfaced and has reached levels above 2021 levels. 45% of sales are housing and 45 are condos, so mainly housing and condos. ROE low, ROA low. Okay, I'm gonna quickly look at this in Koyfin. I can already see that this does not really have the potential to be an A stock, so we're just gonna like quickly do that. Wow, stock has been very trading at a level for sure. Trading at a level as high as 800, 680 to 800. So it really has not moved. Why is that though? Take a look. Description. Div yield 3.66%, so it's not even a great dividend yield. Let's take a look at the profitability. So let's take a look on an annual basis. Pretty low return on equity, really low return on assets. Net income margins really okay. Yeah, they're just gonna skip this. So Sanyo is a no. Okay, so 1420 is don't bother, and today our goal is to get to here. You know, so that is our goal. That is a promised land for today. Okay, next. Nippon Aqua sells heat insulation materials and handles related works. The core product is a heat insulation material using rigid urethane foam. The product boasts a leading domestic market share of around 50%. Okay, interesting. It's unique in being foamed by water within materials without using CFCs and other harmful substances. I don't know what CFCs mean. Supplies product mainly for detached homes, but non-flammable insulation materials used for condos and other buildings have grown. Highly acclaimed for the industry's first commercialization of the recycling materials. Sells related items such as heat shields, moisture permeable and spray-on waterproof material, a subsidiary of Hinokiya Group. Okay, independently listed. Okay, so if we look at sales, sales has increased by roughly 50% since 2018. Fiscal year 2024 is not out yet, but looks like it's continue on a growth path. So sales increase 50%, operating profit increase 4 times. Interesting. Okay, single family homes. They service mainly single family homes and then buildings. Okay. ROE is really high. Nice. ROA is in, okay. Wow, shares took a huge nosedive in 2020. Okay, so there's some potential here. 1429. So Nippon Aqua engages, okay. The overview, quick, 10 years. Oh, so there's a stock split. You know, for this to make sense means there's a stock split. It's not that they dropped from 5,000 to, yeah, there's a split. Yeah. Well, really high ROE. ROA is in this mid single digits, mid to high single digits. EBIT margins, same thing, mid to high single digits. Net margin in the single digits, mid single digits. ROIC, I think the ROIC is probably decent. Okay, about 10%. Okay, enterprise. They have more debt. They raised debt, paid down debt. So they keep around 2 to 3 billion yen of cash on the balance sheet. Hi there, welcome. Someone has joined the stream. Thank you. I was feeling a little bit lonely. Thanks for joining me. Feel free to ask any questions or identify yourself in the chat. And if you haven't subscribed, please subscribe. Income statement. Let's take a look at that. Yeah, they've increased since, I guess, 2018. They've increased 50% in terms of revenue. It looks like they had a really crap year in fiscal year 2018 if we look historically, which is not captured in the Japanese Company Handbook. But probably better period to just look at this. So it wasn't like a 4 times increase, it's more of a 30% increase. So operating income increased 30%. Revenues increased 50%. So not exactly operating leverage there. Yeah, they said they control 50% of the market, so that part in and of itself is interesting to me personally. Next 12 months, 12 times. Cool. So they're trading at a. So the story looks like this. The story looks like they have the top market share for this product, and because the earnings are rather stable because other companies require it, they're able to trade at a healthy, double-digit multiple. At least on an LTM basis. I'll quickly. I don't think I need that much more time to figure out whether this can be an A stock or not. So I'll spend 10 minutes on that. Look, and now. Sorry about that. I had to deal with something really quick. Okay, let's take a look at Nippon Aqua. Doesn't seem like they have any. Oh, they do have English. Nice. English filings are definitely preferred. Got the securities report if they have any. Doesn't seem like they do. Chair's presentation would be nice. Results. Okay. I love looking at investor presentations because it's like manga. So they have 3 divisions here: single family division, buildings division, and waterproofing division, and others. So something about class, so maybe there's some certain class of single family homes that require certain specifications, and so Nippon Aqua is able to do that. Last minute demand. Okay, buildings division, a wealth of projects and salt demand, delays in design changes and construction decisions. Oh, another viewer joined me. Hey Aiden. No, so I did 2 previous streams previously, and I was only able to find up to like B tier, right? So I found some D tier, C tier, B tier stocks, right? But I want to find one, one that's a solid investment, right? And I haven't found one yet. So for these challenges, the goal is just to go through and screen through as many stocks as possible in order to find that one A tier, right? Because I haven't done that yet. So it's just for today's challenge. And thanks for joining me, and thanks for raising that question. Waterproofing division. Strong demand for non-residential renovation projects. However, there are monthly shift in large property projects. Increase in construction of new multi-dwelling housing. Wish there's more information on what exactly they provide. I'm going to quickly look at business overview because it's because I want to know exactly what this business is. It's kind of like new to me. Raw material development to insulation and even recycling. Meet every need in the field of insulation and waterproofing materials. Okay, it seems like they're mainly insulation. They do, okay. Yeah, so single family home sector is insulation installation in single family homes. Architectural sector insulation in buildings, waterproofing. Our Aquafoam series sprayed rigid urethane foam meets these standards through outstanding insulation performance offered. Measures for energy conserving housing advanced by local governments also emphasize airtightness. They're adding a lot of ESG lingo in here. Okay, let's learn about the products because I do want to know how the application works. Single family homes, we perform installation of sprayed rigid urethane foam insulation. So I'm sure most people know who haven't looked at any construction videos. When I was a kid, I used to watch like construction videos with my dad. I think it was like homes on homes. So you typically for single family homes, you have 2 types of insulation. One is a one that you buy in like it's like a pink insulation. So you see it in like bags, and you literally just put it in between behind the drywall to provide insulation and keep your house warm during the winter months and keep it cool in the summer months, right? Or you have a version where you don't even have to cut up the foam and you just spray it in. And what happens is once you spray it, it expands and it provides insulation. I don't know which one is better, but I would think that when you spray in the insulation is a much faster process potentially. I'm actually not very sure about the technology and which one is better. Of Aquafoam, on-site foamed rigid urethane, ideal for highly airtight insulation in wooden. Wow, we have a lot of viewers right now. What is going on? Nice. Thanks for joining. Oh, yes, thanks for the thumbs up, Aiden. If you have any further questions, please let me know. Okay, Aquafoam Light, environmentally friendly insulation. Okay, so they have Aquafoam, which is not as environmentally friendly, and they have a light version, which is more environmentally friendly. On-site foamed rigid urethane that supports highly airtight insulation in wooden. Yeah, so I think the airtight part is probably where they spray it, because if you have the foam that you have to cut up, then it might not be as airtight. So yeah, the spray would be okay. So maybe spraying is better because you can get into different nooks and crannies. Yeah, insect resistance. Insulation spacers for ceiling spraying, spacers for securing ventilation layer, building in ventilation, moisture permeable and waterproof sheets. Okay. Okay, let's look at waterproofing. What is waterproofing? Well, Hajikun. Okay, so they have another Okay, rain leaks, cracking, aging, featuring outstanding strength. Aqua Hajikun. High durability waterproofing material that maintains buildings over a long time. We have some pictures. Thanks, Aiden. No problem. Thanks for tuning in and asking that question. Definitely, the stream will be uploaded onto my YouTube channel. So yeah, for sure you can check back tomorrow. And yeah, and if you haven't subscribed yet, please subscribe. Okay, so they have some YouTube videos, so we can kind of look at it real quick. Okay, so I think what that means is rooftop waterproofing. That's what it means. Rooftop parking lots. I don't know what means in kanji, but we can take a look at the picture and derive for ourselves what that means. Okay, it's also like a spray waterproofing. Okay, interesting. Thank you for subscribing to my Substack. That is just as important. Thank you very much. And read my latest stock pitch on Glory. That's definitely a must do. Okay, that's 10 minutes. Let's set another 10 minutes to see if we can figure out exactly what is their competitive advantage. Okay, sensitivity of raw material costs. Okay, so it seems like they have some things going on that they're going to be implementing. Strengthening construction capabilities, implementation of the strategy for expanding market share up until fiscal year 2026, standardization of airtight measurements. This might be some type of government policy. I don't know what Class 6 actually means. Establishment of sales and construction project management systems, increasing the proportion of Aqua, Moen, Neo construction. This is a product. I don't know which product that is. Okay, so high insect resistance paired with insulation performance and ease of installation. Expansion of construction for apartments and non-residential buildings. Right, that because they're really focused on single-family homes. Construction of nationally important facilities. That's an interesting perspective. So installation without airtightness is powerless. Next generation housing performance proposal supervised by Associate Professor Miyazaki Mai, utilizing future homes with insulation class 6.5 plus alpha and airtightness measurement device. Ratio to total number of constructions 4.4 and 9.8%. Oh. Assuming the number of constructions fiscal year 21 is 1. Okay, if I am interpreting this correctly, because you know how I mentioned about foam for insulation that you have to cut up and manually install, where this one is saying that insulation that is sprayed is more airtight, correct? So it's saying that the ratio of total constructions, if it goes from 4.4% to 9.8% to 20%, then that means this company is just going to increase sales substantially. Um, if that's the right interpretation of what I'm just reading. So annual. Okay, so 30, 28. Okay, it certainly looks like they are increasing sales. This could be very interesting, right? Because if this is true, and you have air tightness measurement services. Wait, what does that mean though? Air tightness measurement services. Does that mean 20% of constructions, newly built single family homes, for example, right? 20% of them actually get someone to measure the air tightness of the of the unit? Is that what it's saying? Okay, interesting. But this isn't the best. I would have to look into that. And then installation class 6 is probably some level of airtightness where it's like, oh, if you meet insulation class 6, then you're very energy efficient, or you're not losing additional energy, is probably what that means. So waterproofing logistics warehouses, factories, and stores. Okay. Monthly shift in large property construction falling short of debt. Falling short of budget, sorry. Increase in waterproofing construction for new multi-dwelling housing, right? Because as we saw in the video, they do rooftops as well. Achieve simultaneous protection against leaks and solar radiation. Inside surface temperature. Effective temperature. Okay, so their waterproofing also makes it so that your also has like prevents solar radiation, which is like just heating up the unit, like turning into a boiler basically. Wish I could learn more about like this has something to do with like the chemistry and stuff, and this is like entirely new, so it's like kind of hard for me to figure out exactly what is their competitive advantage. Might be some type of like IP. Yeah. Product portfolio expanding around the core of two-component polyurethane. Ad timbering. Thank you very much. Ad timbering said on the measurement, houses need to demonstrate compliance up to a certain insulation level to apply for zero energy house subsidies. Interesting. Ad timbering, do you know what the subsidies are? Like, does it basically make it so that it's extremely worthwhile to get this type of insulation done on your home? Um, yeah. Any knowledge you have about it, you can feel free to share. Thank you. But that's good to know. Like if there's government incentive for having a zero energy house, and this is part of, you know, the in order to attain that type of like a compliance to meet the compliance, you using this company Nippon Aqua's product will allow you to attain that. Then that is good for the company. Aquafoam neos for concrete buildings as well. Aqua Neo non-flammable insulation for concrete buildings. Aqua barrier fireproof coatings. Polyol, an organic compound with hydroxyl group as a main ingredient. By changing the molecular structure and molecular weight of polyols, the physical properties such as hardness and flexibility of urethane can be adjusted. This is like beyond me. I wasn't, from material development to installation and recycling. So it sounds like they have 28 sites throughout Japan, nationwide sales network, raw material development and quality management. So they procured the raw materials, product manufacturing, fabless manufacturing, nationwide construction network, in-house construction and certified contractors, construction quality management, ensuring work safety. Okay, recycling, blowing, certified operator under the Ministry of Environment's wide area for recycling. But okay. I don't think the construction component is really where the competitive advantage comes from. If anything, it would have to come from the product in it of itself. Yo, hey Iggy, thanks for joining us. What do you mean by work harder? Work faster? Am I working too slow? Not working hard enough? So waterproofing is a new thing. Sales of urethane raw materials is also a new category for them. Single-family home sales from their insulation seems to be continuously increasing over time. For buildings also. Man, we are getting a bump in viewers. We have 5 viewers now. That's awesome. Just take a look at my Twitter real quick. Oh, we got some reposts here. Nice, 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 nice. Okay. Going back. Focus. Let's focus. So sales have continuously increased for this company. There might be some. So potentially with these new compliance regimes, and them having 50% market share, right? Like that's what it says here, around 50%. That's the market. I wonder if they sell internationally. Okay, so environmental catalyst here, tailwind. Subsidies. I think it's in the realm of a few thousand up to 6,000 subsidy for a house that is built to the standards. Oh, interesting. Okay. Energy efficient labeling. Yeah, so we can see in this picture that they are indeed spraying the foam. That is exactly what that means. Before insulation and airtight ceiling renovation. Uneven temperatures within the room. The temperature at foot level is low due to insufficient airtight treatment. Cold outside air enters. After insulation and airtight ceiling renovation, small temperature differences inside the room due to meticulous airtight treatment. There's little heat loss. And this is for in the winter time. Well, that big of a difference. Okay, let's quickly look back at the evaluation of this company. Currently trading at next 12 months 7.6 times. Okay, I think it's worthwhile to do an actual calculation of the actual enterprise value of this company real quick. Financials. Okay, so this company trades at 784. Nippon Aqua. Ticker 1429. Last quarter was 3 months in March. I think it was Q1 if I remember correctly. Q1, correct. Share price is 784. Guys outstanding. That 34 million. Treasury shares. Okay, let's take there. Div yield 35, so barely increase. 4.5% div yield. Okay, not bad. 2.5 billion yen of cash. And all the short-term investments. If it doesn't say investment securities, I don't usually include it. Not worth looking at. Yeah. I want to look into that right now. Okay, so they have 4.9 billion of debt, short term, and just lease liabilities. They don't have any long term debt. Yeah. So this part is kind of negligible. Yeah, so very little lease liabilities here. And there's no NCI. Okay, so the company is worth 27 billion enterprise value. Let's take a look at the current operating income is. Oh, so 10 times. What is the analyst estimate on this company is? If there is one. Okay. Okay. Doesn't seem like there's anything. Okay, and then what does the company say it's going to earn? So if we look at the forecast from the company in and of itself. Okay, forecast is 3 billion in operating income. So out of 27 billion enterprise value is 9 times. 9 times. This could be interesting. I don't know if it's A though. There could be huge number of housing starts. Okay, this is important. Housing starts. Number of owner occupied homes substantially. Number of total homes also increase. A single family homes division has a high level of affinity with owner occupied homes, as there are many custom built homes being constructed. In addition, the buildings division also performs construction on new condominiums. So this could be an A if I can determine whether there's a huge demand for this company's product because of these housing starts. I mean, it is nice that the sales are continuously increasing. I think the gap comes from what? The gap comes from essentially, they mentioned earlier that to comply with class 6. Where's the slide? Okay, this one. Air tightness measurement services, right? So if there's more and more people doing these measurement services in order to qualify for these subsidies, then more people will be performing this type of installation in their own homes over time because of these subsidies. That's a good thing for this company, for sure. Now the question is, what does that look like when translated to sales, right? Like what percentage of new homes being built, do want this classification? And how does this company provide insulation? Like, does using their insulation automatically qualify them to like 6 or above? Or is it, of course, there's also risk in installation, right? It's not installed correctly. It might not actually reach the measurement that you need. But what I mean is, let's say you're to use like their worst product. Like, if you're gonna use just like any general insulation that they have, like Aquafoam Light, Aquafoam Neo, whichever one you want, do they all as instantly make it so that your property will meet the insulation class that you need? Is there more, or is there more nuance than that? And then look at how many housing starts in Japan, and what is their market share? Where's there some market share data? Sales. Okay, sales for this category is expected to increase 7%, so it's not that rapid. Not that rapid. The unit price is going to drop too, so that's interesting. So if this was in such high demand, why would the unit price drop? Right, and why only plus 7%? Right, this one makes sense. 2%. Oh, but this is their former forecast. And they significantly outperformed it too. It doesn't look like terribly undervalued, but it does look interesting. I would put this as a B for now. Yeah. Just look at one thing real quick. Revisit the profitability. The good profitability though. Just don't know what the growth, like where the growth is headed, right? I need more time to figure that out. I'm gonna quickly read the financial statement, see if they give me any information on that, because they did have that commentary. Okay, so in the housing and construction industry to which our company belongs, compliance with energy saving standards has been mandated for almost all new homes and buildings constructed from April 2025. Okay, good. Based on the Act for partial revision of the Act on the improvement of energy consumption performance of buildings to contribute to the realization of decarbonized society, promulgated in 2022. These energy saving standards consist of two indicators: envelope performance, which indicates insulation performance, and primary energy consumption performance, which indicates energy consumption. The current standards correspond to insulation performance class 4. Okay. The government has indicated a policy to raise the standard to the ZEH, Net Zero Energy House Level, or Class 5 by 2030, and further transition to Class 6, which corresponds to GX, Green Transformation Oriented Housing, is also being promoted. Against this backdrop, Class 4 is already becoming a standard of the past. Meanwhile, in response to the trend of mandatory compliance, the recognition that improving insulation and air tightness contributes to the health of homes and the longevity of buildings is gradually spreading among general consumers. Okay, so not only are you retaining the energy, like let's say if it's heating, you're not only retaining the heat within the unit, you're also helping maintain the health of the home. So like potentially in the colder months, if the house is too cold, maintaining the heat within the home that helps is good for the home's health, is what it's saying. So that's an interesting reason why you would actually build your property up to these class 5, class 6 levels. In this context, although the number of new housing starts is on a declining trend in business environment, okay, that's not good. That's a headwind surrounding the housing industry. Interest in energy efficient homes is showing a further increase due to the establishment of subsidy systems targeting GX oriented housing. Okay, so you have something offsetting it. You have a tailwind here, where new housing starts are declining, but then environmental, energy efficiently built homes are on the upside, providing a tailwind. Furthermore, in the non-residential sector, corporate capital investment, mainly related to IT, is expanding, and investment aimed at long-term rationalization and labor saving is also on the rise. Again, this backdrop, urban redevelopment, particularly in the Tokyo metropolitan area, is accelerating with construction of high-rise condos and mixed-use commercial properties progressing. In these projects, there's a growing emphasis on ensuring high environmental performance and comfort. Okay, it doesn't seem like a core driver, but is a potential driver. Additionally, with the aging of buildings, especially in the 1980s and 1990s, demand for waterproofing renovation work is increasing. The lifespan of waterproofing layers is generally considered to be 20 to 30 years. And in buildings that exceed this lifespan, leaks and deterioration are progressing. Increasing a need for change are also driving demand. Our company is promoting differentiation from competitors by providing comprehensive solutions that add insulation and heat shielding functions to waterproofing construction, thereby improving comfort and energy efficiency. Okay, so what it is saying here essentially, not only are they doing insulation, but the actual waterproofing of the building on the exterior is also aiding in the energy efficiency of the building. So potentially this can be a bundle deal, or it's an very easy cross sell, right? So if your building, is needs to be environmentally reach these certain standards, then not only should you do airtight insulation, but you should also protect your unit from waterproofing. And not only does the waterproofing help with waterproofing, the waterproofing also helps with heat shielding the building from when the sun, rays target the unit. Amid rising market expectations for the insulation and waterproofing sectors, our company has actively pursued order-taking activities in each division, leveraging the product competitiveness of the Aqua Foam series. For those who want to follow along, I might as well just share this PDF with everybody who wants to follow along. And the buildings, okay, hold on. The mid-rising market. Okay. In the single-family homes division, we adopted the keyword insulation without airtightness is powerless, and differentiated ourselves by combining insulation construction with airtightness measurement services, striving to expand market share through an increase in the number of construction units. As a result, orders from major builders with wide area operations expanded in construction projects from new large-scale customers with whom we began transactions last fall also fully contributed. Additionally, we benefit from a rush in demand due to the reduction of the fourth category special exemption, simplification of building inspections for small-scale buildings, resulting in 21% year-on-year increase in the number of construction units, with sales in the division amounting to So, what we saw over here earlier, there was a 21.8% increase in Q1's sales, and we're basically saying that because the number 4 is basically expiring, so subsidies from the number 4 are basically expiring, and people are going into the class 5 and class 6 now, that because their products are able to attain this rating, right? That's just a feature of their product, that there's much more increased demand. So the question is, if they forecasted 7% and now they're forecasted and their actual result 22%, could we also assume 22% or 20% or above for the remainder of the year? And if that were to happen, let's think about that. So if this increases by 20%, let's say, so 1.4, 2.8, that would be 16.5. 16.5. This is at a 20% gross profit, a little over 20%. So if it was 16.5, that would be around. Wait, this is. $25%. Be around 4 something billion gross profit. That's not even counting operating leverage. But that is something interesting. Okay, in the building division, we steadily acquired new projects, including semiconductor factories. Interesting. Data centers, commercial facilities, and high-rise condominiums. However, due to rising construction costs and fluctuations in material prices, some projects experience design changes or delays in construction decisions affecting construction volumes. This period is positioned as a turning point of building a system to ensure a smooth transition from order receipt to construction. The establishment of the construction project management department aimed at selecting more reliable projects and strengthening on-site response capabilities. Okay, so what this tells me is essentially they made the proposal for a project. At the time, price was a certain amount. And then when it came to actually doing the project, the prices skyrocketed. So now the buyer has to opt for cheaper materials to meet that budget. Construction unit prices have remained steady due to the acquisition of additional work and flexible responses to specification changes by this division, contributing to improved profitability. Waterproofing division is still like a small segment. Yeah. Okay, so regarding our outlook for the future, we're focusing on recovery of the current economy, revisions to the legal system related to housing and buildings, subsidies and preferential tax treatment for energy savings, and support measures such as low interest financing in response to increased demand for insulation materials. We are undertaking the following initiatives to achieve sustainable development of our company. There's currently no changes to their forecast. So there could be an earnings boost if they say, hey, the demand is actually way more. And then in the next period, they say, hey, we have an earnings beat. So we're going to increase this, this level over here, which is certainly possible just based on my analysis earlier. Simply just, have any other sales breakdowns? No. They don't. I know they do. So good sales growth. Or yeah, I don't know enough about the exact the quantifiable impact of class 5 and class 6. I think if you can quantify that a little more, like I have more understanding of like, oh, what this means on the demand for the single family home division, I think that this could be even more undervalued. And then also look at is there anything in the building division? The building division is similar. The next is waterproofing. Is there a chance that waterproofing increases eventually? Oh, it increased a lot. Non-residential waterproofing is substantially. Or new multi-dwelling housing. Interesting. Interesting. And then hold on. 719. Crap, come on. So okay. So it's still 10% of single family homes, but it did increase to 100%. So there could be some growth potential in the waterproofing because I don't see why it can't stop growing. Waterproofing is waterproofing. Like buildings need waterproofing, right? And it becomes an easy cross sell when you do buildings, for example, right? Like waterproofing and insulation within buildings. I think that's a natural progression there. So this could be also a very interesting segment in the future. Hey, Ads, thank you very much. Thanks for the compliment. Yes, I will try to keep it super informative. And yeah, no worries. You can feel free to drop back in anytime. And of course, this recording will be recorded, uploaded to my YouTube. And if you haven't, please subscribe. And that way you can, you can definitely review in the future. And if you have any questions, feel free to slide in my DMs and ask me. Thanks for tuning in. I'll see you next time, Ad. Asian Cyan. Is this the new popular video game everyone been talking about? I mean, this is the new blue sky, blue ocean strategy for FinTwit investment, accounts now. Now I'm gonna start this wave of people doing live streams of them going through financial analysis, and then everyone and their mother is gonna join in and try to capture the market. And then in maybe a year, I'm gonna be I'm gonna be the Ludwig, the soda poppin, the Kai Sanat of investing live streams. Hopefully, and all my investment live streams, I'll also invite rappers to do freestyles of pitching stocks, and that's the trajectory that we're going at right now. Okay, so they have been onboarding more and more laborers for their segment. Yeah, so no worries, Agent Scion. You can feel free to pop in and pop up whenever you feel like it. Yeah, thanks for the compliment. Yeah. Oh, I'm gonna continue doing the screener. There's some other information I can definitely put in that could be of interest here in the financial aspect. Intangibles. I wonder if the short-term borrowing has to do with the construction. Portion of longer debt is very low, but then how about the short-term debt, bro? Break it down here. Okay, so tangible book value of around 10 billion. Operational capital 12 billion. They're using around 10 billion of assets and to generate how much? Much operating income? 2.5. That's not bad. Let's see. Are they a labor-intensive business? They might be. Yeah, 13%. And you get to that. So, okay. They definitely have some advantage in the pricing power, but not substantial amounts. They don't need a lot of assets to procure their product. But it is labor intensive to install the product. So is this an A stock? Calculated enterprise value as 27. 27, and they said they're gonna be generating 3 billion of operating income correctly. Yes. And then if they have a surprise year, they could go up to around 4. They could go up to 4 on 27. So it's like 7 times. So they drop from 9 times to 7 times. And if it re-rates that, it's a small upside, but I don't think it's a major upside. Okay, I would give this a B. I would give this a B. I think that's enough time we spent on this company. This was close. This was close. It was undervalued enough This could be an A, but I don't think it's undervalued enough, sadly. So moving on, next company. Next company. Okay, Jinjib. I did formally look at this company. They're not really making money though. Jinjib. How was Jinjib done recently? 142A. They do have a monopoly on recruitment of high school students, so that's basically their niche. And their stock price has not been looking good. How about their sales? Oh, no data on here. Okay. Yeah, they're not. Yeah, I just skipped this one. The Jinjib 142A. Don't bother. 142A. First Corporation 1430. Change the name here. First Corporation, a company involved in the construction of condos for sale mainly in Tokyo metropolitan area. Started business in Nishi Tokyo City, Tokyo in 2011. It's giving me a lot of information that doesn't really matter. So I actually prefer the Koyfin description a lot better. So I'm going to read that one. Oh, perfect. This is great. This corporation operates as a general construction company in Japan. It constructs condos. The company was okay. Yeah, that's perfect. They construct condos. Awesome. Exactly what I need to hear. No more fluff. How's the stock price? Pretty flat. Recent as of late. 2,000 dropped to 850. Low 600. Maybe some support at 700, 680. Okay. Imagine that profitability. Oh, recent. It's a recent company. Yeah, low profitability. I just feel like whenever I see a construction company, I just want to skip it. Because it's like, okay, let's look at the interest value. I give it some hope. Okay, 4.1. Okay, 4.1 would have been interesting. Quarterly. 7.5. That cheap, buddy. Income statement. 528. Non-massive revenue growth. Gross profit dropped as well. Operating income dropped. No. Next. 3981. TS is 3981 gonna be a potential A class? Is it? No. Let's take. Oh, Beagley. Okay, Beagley. This is something that Emerging Value Olivier has formerly pitched as well. So Beagley engages in the platform and content in Japan. The company's platform offers users free charging and other ancillary businesses centered around Manga Kingdom. Its content segment provides ebooks, publishing, and other ancillary services. Also provides comic distribution services through Manga Kingdom brand name Novelba, a service for novels. Beagley was founded in 2004 and headquartered in Miyataku. All right, TS, what makes it cheap? What makes it cheap? It's been a minute. Let me quickly look at the price. Yeah, I did remember it going up to 2,000, which is really nice. 1,800, and then it just tanks. Eh? I mean, when Emerging Value first pitched it, it was also cheap, right? It's trading around the 1,000 mark. I remember formerly. Are you guys aware of the key performance metrics for the company? Like in terms of like the subscription, churn rates, number of active users, that kind of stuff. Are you guys aware of that? 'Cause, yeah. Okay, so looking at ROE, not bad. The thing about this model is because they sell ebooks or manga ebooks on their platform, it basically can have really good operating leverage if sales, if signups were going to be substantial. Declining cross profit, declining SG&A, which is nice. Nice. That shows some level of operating leverage. Oh, an increase of 7. I'm 100% not. I don't even know the name. Okay. Take a look. ROA, really low. ROE, good margins. EBIT margins, good EBIT margins. I like the SG&A drop though. I like that part. Okay, uses some debt. Raise a lot of debt. Deleverage. Okay, they did leverage their balance sheet. I like that. Currently at 7 billion yen. 7,300. So okay, so it's the cheapest it's been in a while, probably. Five times debt covers that. All right, let's take a look at what the investment securities is like. That might be the one that really puts it through the 'This company does not have filings. Yeah, it does not. Okay, guys, give me a second here. I'm gonna have to translate this. How's the stream quality, guys? How's the audio quality? How's the viewing experience so far? And if any time things are too small, feel free to let me know to zoom in. I can always do that. Okay, so this is translated IP. I have to quickly do the financial statement. Second. Awesome. Thanks, guys. Okay. Let's see. An animated waifu. Maybe in the future. Maybe in the future I will, be able to collaborate with a well-known VTuber. Yeah. I know of a friend who wanted to do some like VTuber stuff where you can actually put on like a VTuber thing. I don't know how to do that. That's too far. That's too far above in terms of technology that I want to actually implement. But I guess anything is possible. Or I might create my own VTuber avatar, for my own face, so that because I have to, worry about my hair sometimes when it gets oily and it just lumps and it just looks bad on camera. But it would be a nice thing to figure out in the future. Plus, my voice is too deep to even do any waifu voices. Yeah. Okay, let's analyze Beagley real quick. Oh, there was 1429. Sometimes I forget to delete information in my blank folder. I'm not supposed to actually use the blank folder, which is stupid of me. Okay, let's do it real quick. Okay, Be Ugly. Let's take a look at this company. Be Ugly. Okay, what is quarter? What is this quarter? First quarter, Q1. Share price. I believe it's 1-2 something. 1252. 1252. And then we have the name in here. Shares outstanding. 6.3 million shares. Treasury shares 700k shares. Okay, market cap of 7 billion. Cash, slight drop in cash. Oops. Pop. Nope. No other short-term deposits. Yeah, no investment securities. Short-term debt around 3 billion. Long-term debt. Okay, 4.3 billion in cash, 4.5 billion in debt, 7 billion enterprise value. We have net assets of decent amount, slightly less than 1 times book. Nice. What is dividend? 48, and it's a year-end dividend. 3.8%. That's not bad. That's not bad. Intangible. A lot of intangible assets. Well, yeah, anything is a platform. It's automatically just. Operating assets are actually very low. Okay, and then what type of return are they generating here? So again, enterprise value is 7. That's roughly how much I use in assets to generate a return. What is the return? That's pretty damn good. Put 7, it's on the rise. Plus 7, This is sustainable. So if we assume 1.5, it's 3.5, 4 times. 4 times is what it's trading at. E to EBIT, roughly 4 times. No consensus estimates. Okay, this could actually be an A. Let us look at the IP. That can't be the right metric. It can't be. Sales were down 100%. No, 10%. That's not right. I think this might be 10% and 8.7%. I think that's what it's saying. Yeah. Monthly average users, which had been on a downtrend in the previous period, increased quarter on quarter, but was down 21% year on year as it took time to establish and develop light users. That's not good. Offering profit was negative 121 million year on year due to decrease in sales. Advertising expenses, which has been particularly restrained in the fourth quarter. That's not good. 4.2% operating profit to 0.3. Segment. This graph is kind of crap because like operating profit, we can, if we look on this side, it's basically negative, right? Turn negative. It's not really high, right? So sales are like this, but like, Okay, monthly average user is on decline, which is really bad. You don't want to see it, and it's a 20% decrease. That's not good. ARPU. So monthly active users, this is, I think that's average revenue, annual revenue, or average revenue per paying user, something like that. So the amount that they're paying, let me just double check. Yes, average revenue per paying user. Okay, so they're increasing, so they've increased their price, but that's all that means. But you know, they've earned more revenue, but then monthly active users are going down. So content exhibit, publishing of books and magazines, mainly Bunkasha and their digital publications. Digital sales are due to backlash from the effects of measures taken in the previous quarter. As a result of controlling number of distribution outlets, print publishing sales increased 74% year over year to paper publishing sales due to decrease compared to previous year. Segment sales 92%, dropped 8% then. Good operating margins though, but still in decline. Although digital sales were on par with the previous fiscal year, digital revenues declined year over year due to increases in costs, including manuscript fees. Due to the decrease in book distribution, manufacturing costs also decreased, resulting in improvement in print publishing revenues. Paper publication, while revenue improved, digital revenue decreased. Paper publishing increased, but digital revenue decreased. Okay. Also marginally profitable here. Marginally profitable, 220. Content segment KPIs. So publishing is a declining. Digital sales are well drop from quarter to quarter though. Digital sales and release dates. What is this graph? What is this colorful graph? Okay, showing it's increasing year over year. I guess that's what I'm saying. Regrowth of Magnet Kingdom through strengthening measures for light users and optimizing operations, expanding sales of digital content aimed at women, and strengthening production of works aimed at general public. Okay, let's look at the commentary if there is any in the financial statement. Okay. So it is kind of cheap, but then the thing is, the problem with this company now is how do they offset the decline in monthly active users, right? Because that is important, right? Because if they don't increase their monthly active users, this segment is going to start losing money, right? And that's not good, right? So even though in fiscal year 2020 24 they did good, because of this monthly active user decline, if they're not able to stop this decline, then essentially this is meaningless, right? Like they're not going to be able to defend this operating income, right? Like let's say, okay, let's say 7 billion, right? If it drops to, because of decline operating income, it drops to 800, right? Which is like 9 times. It goes from 4 times EV/EBIT multiple to 9 times, right? And then on a, because they have interest expense now, right? They have more debt, they have higher interest debt, I guess, interest rate debt. Market cap is also 7 billion. 7 billion, yes sir. Yeah, if it drops something like this, becomes a 10 times PE, right? So like this could really quickly get bad. So although on the surface, if you look at the most recent quarter, it looks cheap. Or was pretty good. What? Excuse me. 407. And then they got what? Platform did well. Platform carried, basically. Yeah, platform carried, right? If this drops to 6, this is really concerning, right? 6. If you take, say it's like 250 times, 230 times 4 quarters of that, right? That's gonna be like 800, 900. And then if MAU continues to decline, then it's not gonna good. It's looking ugly. So basically, this could get ugly really quick. So basically the multiple it can lead to, it looks cheap at 4 times if you look at fiscal year 2024 numbers, but if this is what's going to continue happening, then essentially, like the key indicator is what they can do to get users to come back. I don't know if they can. Because this also is in relation to disposable income, right? Like this is a luxury, right? People paying for digital books and not pirating it is a luxury, right? Just as people who pay for Netflix and not pirate, So it's like it boils down to people's disposable income to a certain extent and what their entertainment stack is going to look like. Um, like if you have Crunchyroll and this, which one are you going to give up? If you have Netflix, Crunchyroll, Spotify, yada yada yada, what are you going to give up when you got bills to pay, right? Um, yeah, I think so. No, this would not be an 8. I'll just quickly get to that point really quick. But thank you, TS, for recommending that stock to look at it for the special request. No problem doing that. Or you can answer TS. What do you think that the is monthly active user going to rebound? Well, what do you think it's going to go? If you can provide me insight on that, that would be helpful. But right now, I would say it's maybe even a C. I would say. Okay, next stock. So this book. Libwork 1431. Let's look at this company now. Why are these all construction? Hopefully this one isn't. Okay. Oh, it is a construction company. Custom home builder founded and yada yada yada. Okay. You know what I'm gonna do with these construction companies is like it's like so hard to find a good one. So I'm just gonna like quickly look at the profitability and then call it a day. So it's like, okay, so operating profit stayed the same even though sales went up almost double or more. That in and of itself is kind of crap. So let's see, 1431. Labor worker. Profitability, please. You're welcome, TS. Hey, TS, are you subscribed? Because I put in all that work, maybe you should subscribe if you haven't already. Okay. Okay, so return on equity is very patchy. Some years good. Oh wait, this is quarter. My bad. Let me take annual. Trash. Kind of trash. Okay, let's look at enterprise value. This is bad. That's kind of bad. Okay. Skip. 1431. Awesome. You know what? I like this new approach. Once there's like any red flag, just like dating, right? Like, like anytime there's a red flag that we don't like, we will immediately just say bye bye. We will not try. Vistera provides management services for demolition works of steel, power, gas, oil, and other plants. Okay, interesting. Originated from civil engineering firm. I don't need all this other information. 1433. 433. Okay, engages in plant demolition work and other related businesses. Is involved in the dismantling of plant facilities such as steelworks, power plants, gas plants, petroleum, PCB transformer, and other factories. The company also provides 3D measurement and human resource services and real estate sales, rentals. Okay. No div yield. Okay. Relatively trading within a range. Don't see much hope there. Ooh, that don't look good. It doesn't look good, doesn't look good. Had a really good year in fiscal 2022. See, oh, absolute trash. Okay, they have a lot of cash, right? Oh no, they don't. They're dead. 11 billion. What does sales look like? Wow. Sales increased a lot last 2 years. Oh, but then cost of sales goes up directly in line, right? It's not like gross profit changes very much. So 20%. This one's a little bit less than that. Around 20%, around 20%, around 20%. Okay. Yeah, profitability is just for this. What's the multiples? What are these multiples? What? No, ignore. Next company. Yeah, I like this new process. We just yeah. Okay, Jesco 1434, independent electrical equipment work firm formed in 1970s, engaged in engineering works. Again, these are very wordy. Oh, this is also wordy. Okay. Engages in electrical equipment construction business. It operates through three segments: domestic EPC business, Asia, basically Asia EPC business, and real estate business. The company engages in the installation of electrical equipment and telecommunication systems or commercial facilities, mobile communication base stations, disaster prevention, and administrative radio systems, auxiliary facilities for roads, and solar power generation. Well, that's a wide range of stuff. It is also involved in the construction work. Oh my god, this might be in a too hard pile. Okay, let's just quickly look at what the profitability is. Okay, not bad. Okay, not bad. EBIT margins low. Don't like it. The income margin. Okay, is there enterprise value? Oh, they have more debt too. They have more debt. Okay, what are the multiples though? Oh, no, multiple looks cheap though. Multiple looks cheap. How cheap? 6.5 times. Income statement. Let's take a look. So doubles in 2017. Increased around 50% since 2020. Gross profit. Okay, how about historically over here? Say stagnant for a bit of time and then finally doubles. So in 10 years, it's double. Okay, 1221. Could this be cheap? This is still like a construction related type of business. So 6 times PE. Multiple. Up to 3.3 times PE. Holy. 5 times PE. 5 times PE can be as low as 2.5 times. Let's take a look at the pricing here real quick. So 400 to 1200, 3 times. Okay, okay. Okay. So it goes from 900 to 1200. A 30 something return. I can expand into the one multiple and expand into 11 times on an annual basis. 9 to 10 times P. Question is this this year a one-off, or is it gonna normalize back to 10, right? Question. So we're gonna quickly look at the financial statement of this company and determine if this is a one-time thing or if this is a they just had a really good year last year, or they're gonna English, I like that. Oh, group businesses. Let's quickly have a look at the group businesses just to, mangify the investment process. I like looking at pictures. Renewable energy, communication systems, electrical equipment. Okay. This is solar panels. Looks like that. IT. Oh, let's look at what they say is there. It's okay. Domestic business 78%. AGN is 20. Okay, so starting to expand outward. So if we believe that AGN could be a rev sales driver, 6 times is cheap. 6 times, 5 times PE can be cheap for this. Very cheap, actually. So there's some potential here. Potential. Okay, so highway communication, faster radio systems, mobile basic. Beyond 5G. 6G development. Wow. Hmm. What's the market again? How are they? Are they worth 40 million yen? 40 million USD? This company? Like these categories are not interesting. I don't. That's interesting. Hmm. Seems like something like this. If they have that many categories, should be worth more than like 40 million. What's the Asian? Oh, equipment. Electrical system. Disaster management information system. Seems like that's a core thing. So communication devices. Condominium electrical air conditioning sanitation fire protection system. Interesting. Okay. Investor relations. Take a look. Why is this so old? What? Do you have any documents, buddy? These are just infographics. Okay, guys. I guess I have to translate it then. Of course, the English website doesn't have crap on it. Okay, give me a second. I had to translate these documents. You guys want to hear a banger song? I'm gonna play a banger song that I recently found on Spotify. You guys should be able to hear it. One more document to translate. Okay, I know you guys enjoy the music, so but I need to, continue on with the analysis. So yeah, we translated all three documents. So take a look at the company. Okay, sales increased substantially. So real estate's for sale. Proceeds from sales of real estate for sale. Wow, huge bump from real estate. What is that from? What is CRE? What do they mean by CRE? No music. Really? Oh, there's no music now. But what about before? Like, okay. You hear music now? It should be playing. Yeah, I'm gonna keep it on until you tell me. It says it's playing on my end. What? Seriously? Oh, man. Oh, thank you. Thank you. I know it's enough. I know it's enough and can be, a little bit too stimulating at times. So that's why I want to add some music so that, it kind of, so you guys can focus on the analysis, right? And not just, be overly sexually enticed by my voice. But okay, that's something I will work on in the future. But if you guys can't play the music, then it's whatever. Back to the company. Okay. What is their CRE business? What is this? We operate a wide range of real estate businesses, from buying and selling real estate to value up projects and management services. Our group has grown based in Tokyo and owns many high value properties, mainly in the city. We operate these real estate assets efficiently and work to make them a source of vitality. Okay. Real estate sales brokerage, corporate real estate management. Okay, so I need to do then. Okay, then it is worthwhile for me to do an analysis because they maybe have some real estate on their balance sheet that's currently not being shown. So that would potentially make this company an A company. Please be an A company. Please. One, 4, 3, 4. Oh yeah, change the ticker now. This is 1434. 1434. Okay. Just code 1434. Last quarter, Q2. Share price. 876. Excuse me. Okay, 6.954. 16319. 6 billion. Kish. How much is Kish? Slight reduction in cash. They have more real estate for sale. They have 7.3 billion in real estate. So they have a lot of supply on their hands right now. Okay, investment securities. So not as much as I thought they might have. Deferred tax assets, long-term accounts receivables, other. So not really that big of a deal. Hello, welcome back. 888. Thank you. Thank you for returning. Thank you. 888, what time is it where you're at? Because we also chatted around this time yesterday. Curious what time it is where you're at. If you don't mind sharing. If you mind, that's okay too. They have more debt. Not a lot of lease obligations, so this one is very little. Quite a bit of debt. What's book value? Net asset. Hmm. 0.9 times price to book. So quite the opposite. They have a lot of debt. But they do have more real estates for sales, which means they have more projects coming down. How defensible is this? How likely is it for them to continue this track record of being able to sell things? Oh, well, we can look into it. Real estate business. Last year, this year, it is done very well. Late afternoon or early evening. Nice, awesome. Sorry, my brain is might be farting right now. What is ASNL? Were those other users from yesterday? I can't remember. Okay, based on the real estate leasing business, we have been working on a wide range of businesses, such as increasing value through renovations. And as our properties are operating at full capacity, our rental management income has progressed steadily. In addition, we sold one property for sale in the first quarter, which led to an increase of revenue and profits. Orders received in the segment for the current interim, or 2 billion yen. Orders received in the same period were 176 million, and business results were include sales of 2016, the segment profit of 317. Okay, so off of 2 billion they made 317, so like 15% margin there. Off of 176 they made 10% margin here. Brian Zhang, hello, welcome. I haven't looked at the stream results. How many people do we have on stream right now? Very exciting. Oh, we have 6 people. We have hit a record high number of viewers for today. Previously it was 5, now we're at 6. This is getting very exciting. Welcome everybody. Again, if you guys don't know, currently today's Oh, I see. Okay, age, sex, location. Okay. Well, I'm male, and the other two you guys can guess. um, yeah. If I can hit, if I can hit 10 viewers at a simultaneous today, that's a new record. I think my most has been like 6 or 7 at one time. So if we can get more than 6 or 7, I'll be extremely happy. Yes, I'm basically telling you guys must stay on, or else, um, yeah. So for those who are new to the stream, essentially, I am doing a Japanese Company Handbook challenge, and today I want to find A tier stock. Currently, I've been seeing a lot of B, C's, and D's and crap companies, but none A's. So I'm trying to figure out if there's a company that's A, and until I find that company, I cannot end the stream. Which is really crap. I don't, I'm locked in. I'm locked in though. So, do they have segment profit here? No order backlog for the real estate sales, so as on an as is business, as is basis. Domestic EPC business in the renewable energy related equipment sector, which is a focus area, construction of mega solar panel power plants and self-consumption solar power generation facility, as well as construction of communication systems for various plants in the wireless communication infrastructure sector, progress smoothly, resulting in increased sales and profits. Asian EPC business in the engineering division, the current focus on strengthening technical capabilities and increasing the number of engineers has contributed to the acquisition of new customers, and performance has progressed smoothly. Meanwhile, in the construction division, the strengthening of regulation in Vietnam continues to have an impact on the construction industry, and we have focused on recovering allowances for doubtful accounts. They're not getting paid then. That's not good. Okay, overview of business performance. Enterprise value 12 times. Let me just quickly look at the profitability. Just review that a sec. I like reviewing this stuff. Look at 10 times EV EBIT. But this is in a very good year. It says 300 something of this was from real estate. So the other ones were coming from, the other 900 were coming from their EPC business. Domestic and overseas. How's LTM here? 1.4. Wow. Quarterly? 283. 856. So just 1/4 of like really high sales though. But why? Question then boils down to why. Why was that period so damn good? Why was this quarter so damn good? Engineering, EPC stands for engineering, procurement, construction business, such as construction and maintenance of various social infrastructures, such as renewable energy, wireless communication infrastructure, both for which I'm not really familiar with, and renewable work of aging infrastructure equipment by utilizing technology and experience of electrical equipment, telecommunications equipment construction that we have cultivated over many years. They've also diversified their business with real estate business and built a sustainable society through our business. Okay. Life cycle support for solar panels. Our group has engaged in the construction of O&M, operation and maintenance of solar panels for over 20 years, together with our business partner J&T Environment Corporation, a recycling company we invested in. We will contribute to the creation of recycling-oriented society by supporting the entire life cycle of solar panels, from their construction to repowering and recycling. Hmm. I'm gonna quickly look at their Q4 and see what they say about it. But I could look also into here for now. If there's any information I can get about this company, about where their outlook is. Okay, so they have communication equipment is stable and going up. Public facilities, ETC, disaster prevention, radio, and surveillance cameras. Nice, also going up. Forecasted to continue to go up. Communication equipment is forecasted to go down. Electrical equipment. Continue to go up. Solar panel generation equipment. Okay, so they, with solar panel construction, the company seems to be benefiting from that. Asian EPC. Oh, we are at 7 viewers, everybody. We are at 7. Welcome, whoever just joined the chat. Welcome. And the design and estimation department, the current focus on strengthening technical capabilities and increasing the number of engineers, contributing to acquisition of new clients and progressing smoothly. However, in the construction department, the strengthening of regulation in Vietnam continues to have an impact on the construction industry. So the focus on collecting allowances for doubtful accounts. Okay, so design and cost estimation. Construction. Oh, 2024 has gone down. So it's actually construction has gone down, but design and cost estimation has gone up. Okay. Consolidated orders and backlog overview. These numbers are interesting. Okay, so we compile these numbers properly if I think I understand where these are. So I went from 13 billion to 16 billion to 18 billion, which is good. So orders are increasing. Okay, real estate CRE is expected to double in this year, so that's good. That's good. But it's still a construction company. That's the thing that is difficult with this business. Okay, let me quickly zoom out. Okay, so 12 enterprise value. You have market cap of 6 billion. You're taking on debt. Long-term debt. Just quickly look at. Okay, so they've started raising debt in fiscal year 2020. Cap has continued to go up though. And now it's a 6. As value is now at 12. Yeah, 12 here. Back at 12 now. This is not correct because it doesn't have Q2 numbers into it. Statement. Do we have analyst estimates? No, we do not. No worries. Have a good dinner, TS. Okay, 8 says, can it be as simple as them doubling dividends before the stock start going up in 2023? Sorry, in reference to what though? In reference to like why the debt is up so much? Like, I don't think they issued debt they issued dividends, right? Wait, there should be some dividend yield here. Okay, so they did double it recently. I don't think that's enough to debt balance. Welcome. We have another viewer. Now we're at 7 viewers again. Awesome. Okay. Welcome, welcome, welcome. Please comment in the comment section if you'd like to engage. Don't be shy. We're a very friendly bunch. The risk is if construction volume declines, like it declines into some former year, that could impact the multiple quite substantially. So it might actually increase for bad reasons. Yeah, and I don't really know much about solar panels and all that kind of crap, so I would. This is not going to be an A. This is not going to be an A company for sure. Is it a B? It could be a B. 12. Sorry, let me just think about valuation wise. 12 EBIT, 12 EV. What do they themselves forecast their financials are going to be? What is it going to look like? Consolidated. Okay, they think it's going to be 1.8. So 1.8 on 12 was a little over. So 7 times? A little over 7 times. They have debt. Yeah, I'll just put this in the B category. Okay, move on. Next company. That's unfortunate. That's unfortunate. Okay, we're gonna close these tabs. A lot of tabs. Oh, shout out to my continuous compounding page, my Substack. If you guys aren't subscribed to my Substack, please go over there and subscribe or follow. Okay, next page. 97. Robot home. Interesting. Established for the planning, design, sales, and others of designer apartments in Fukuoka. Experienced rapidly growth. That's good grammar. Through business model. Okay, I am just gonna completely skip that. That's some cancer description over there. Robot Home engages in the AI, Internet of Things, and robot home business in Japan. The company solutions include Robot Home Kit and IoT rental housing solution. Robot Home, an app that helps owners manage their rental properties. Robot Home for PM that that manages moving in and out. Also for property managers. Information, remittance, history, and documents. Robot Home for maintenance, an app for maintenance services. Robot Home for agent for quick search of vacant rooms that allow agents to find tenants. Offers online consultation, land selection, contracting, delivery, building matching, and building completion delivery services, service support development, and installation of AI, IoT, DX services, and warranty services. The company was formerly known as Tateru. Oh, there's some shit with Tateru before, right? Because of I'm aware of Shiniken. Anyone who's aware of Shiniken, so should know a little bit about Tateru. But then the thing is, they renamed themselves just to kind of get out of the limelight, kind of thing, right? So if you look at the share price, it used to be like this, and then it dropped and tanked like this. Very nice. Okay, I'll quickly look at the financials. Yeah, so Robot Home is I believe like a branding thing to sound more AI, but literally what it is similar business model to Shiniken back in 2021 before they got acquired. Essentially, they help procure land, help procure land, help you design the building, help you rent it out if you wish to, and most salarymen will actually get them to rent it out, so they also take a fee from the rental. Is essentially what happens. So they're actually under a scandal for building or signing up people who are actually unqualified, if I remember correctly. Don't quote me on this. I believe it's Tateru, but it might have been a different company or a mix of companies. But essentially, they were basically signing up people who are less than qualified and making up information essentially to get them qualified. It also actually, it might not have been that. It might have been actually some like construction issue where they're kind of cutting corners in the properties that they were in the properties that they were selling. So they got screwed up that essentially. So, but what is the company currently worth? So 13 billion market cap. A lot of cash. A lot of cash. So it's around 5. Would be 8 billion enterprise value. This is still the current figures. That's not very cheap though. 7.6 times, 8.9 times. The profitability increasing over time. 24 billion, 3x. So it has, okay, it's got a lot of hair, but then it could potentially be a good candidate. I know some people would probably not touch it within like a 5-foot pole, but so 8. Around 8 times EV. For it to increase this much, it has to be through some level of construction. It can't really be from other things, but let's look at overview real quick. What's a 1-year price look like? Dropped to 130. What's 3-year? 60 dropped all the way down to 130. Excuse me. So 13 billion market cap is one of its lowest as of late. Iteration of so it is trading at a pretty low historical evaluation. Okay, let's take a look at it. Anyways, I know it has a lot of hair and has a really bad rap, but let's take a look. Because I remember they have to pay some form of like compensation for their wrongdoings. And I remember they were nearing the tail end of that. Maybe already past the tail end, but we'll see. Yeah, but previously they had a horrible rap. Like just abysmal rap. I don't know. Oh, I have English, right? Give me English, please. Social impact report. All right, buddy. Okay, English. Awesome. Awesome. Let's read this. Yeah, and literally robot home, I have a feeling is like literally they just like digital asset management being like, oh, they have a keypad. It kind of can get into the unit, right? And then whenever someone moves out, right, you can just just say change the password on the keypad type stuff, that kind of stuff. Or before you go into the unit, let's say you're coming home from work, you can use your app maybe to adjust the AC or something like that, and that's what they mean by this type of stuff. But it's really not that advanced, I think. Well, we'll see. Yeah, so this is what their original business was. Land agency. So find land, build it, management company. They help you manage your property, and then either you can sell it or you can lease it out. Just throwing terms out there, I think. Wow, forecasting 24. 1.4. If okay, so enterprise value is 8, then this would be, let's see, 2.8, 5.6. Around, okay, around 5 times then. Sorry, around 5.5, 5.5, 6 times around there. Yeah, that's pretty cheap. It's interesting that their sales actually went down in Q, but they're still forecasting this huge sales spike over here. Increase in terms of the normal figure excluding sales of large scale inventories in Q1, of which effect was okay. Driven by so because the sales of construction is lumpy, it's probably coming down somewhere in the future quarters. Is what it's saying. Human resource investment, capital management, profit increase in terms of normal figure excluding sales of large scale inventories. Okay. Financial position remains robust while utilizing cash and deposits and interest-bearing debt corresponding to an increase in the number of buildings developed. Effectively debt-free management with an equity ratio of 65%. Work to drive top-line growth in the flow income domain and through an enhanced inflow of recurring income domain, build an even more solid management foundation. It's just bad translation, I think. Can they do that though? Work to drive top line growth. 60 buildings, 100 buildings, 140 to 200. You're really gonna 3x in 3 years? Recurring income. Increase the number of managed properties. That would be nice. Yes, if they can manage 2,000 properties, that's really good. That's definitely really good. So they build the buildings and then they manage the properties. That's obviously really good. Increase the number of managed properties. They're at 600. Interesting. 1,500 units, 5,000 units. So if that is truly the case, increase the amount of gross profit from recurring revenue. 180. 180. So gross profit. We say half of this is operating income. 90. That's only 900 mil though. If you had 10 times multiple of that. We'll see. I mean, it's good. It's going up though. It's good. It's going up. AI IoT business. Exactly. You're charging people to use some app or something? Profit continues to increase. That's good. Promote invigorating the platform by maximizing the utilization of collected data, create new value. Robot homes support owners smooth asset building from consultation to purchase, management, and sale. Robot home for PM reduces for property managers reduces vacancy risk and improves management quality for streamlining operations utilizing RPA. Robot home for maintenance, the in-house developed cleaning app for improves efficiency of maintenance operations and their service quality. Okay. Robot home for agent, quick search for vacancy allows agents to find tenants efficiently. Robot home kit contributes for enhancing resident satisfaction, property value with manipulation of AI and chat function. All right, see ya, Brian. Thanks for joining in. Really appreciate you staying in the chat. See you next time. And if you haven't subscribed, please subscribe. Okay. Yeah, I agree. Like a lot of times when they mention AI and that kind of crap is usually just a bunch of fluff. Doesn't really mean much. Provide next generation DX rental housing, smart life in an Internet of Things rental housing that can control with a smartphone. So universal remote, open closing sensor, indoor monitor. I mean, most places have that. Intercom, smart keys. Yeah, this is just fluff still. Yeah. Overview of comprehensive DX support service. Launch a comprehensive DX support service drawing on our experience of developing and running various in-house products and buying. Okay, a number of properties to which IoT has been introduced. Properties owned by group. Properties owned by other companies. Okay, that's good. That's good. Not bad. These are good metrics, so it's increasing. Number of client companies of services. Okay, number of companies are also increasing. That's also good. Recurring income, flow income. Flow income, recurring income. Okay, what is nice to know here is that the recurring operating income from the recurring sales is really high. It's like close to 50%, like 40 to 50% essentially. That's really good. And then on 9.6 billion, they generate 1.1. On 5.3, generates 0.3, and then 2.5 to generate 0.2. So I believe this is in relation to potentially construction. So recurring income. I wonder what their forecast for recurring income in the future is, because this could look interesting. Diagram to summarize the robot home business. The company's growth cycle is a virtuous one that involves increased recurring income through providing asset building solutions for investors, sales and reinvestment, and further growth in the circulation of the platform. Increased number of owners, wealth management system, increased sale and reinvestment, increased flow income, increased recurring income. System that automates rental property management. Proprietary tech domain. All right. Increased number of managed properties, securing profit, foundations, and investment. Oh, 2,263 property owners, managed properties 27, occupancy rate 98%. That's really good. Number of property owners. Okay, property owners is increasing, which is good. Number of real estates delivered. 3. The occupancy rate for properties under management contracts have been upward trending. That's good. Properties constructed by the group, 98%. Management contracts, 97% overall. Properties owned by the group. Properties owned by other companies. Develop a platform leveraging technology for rental property management owners. Register as an owner. Invest. Choose an investment property income and expenditure simulation. Okay. Manage. Sell. Reinvest. Asset management concierge service. Sales simulation. Purchase of a new property. Visualization of the status of occupancy notification and confirmation of move in and move out, repair work order management. One-stop service from online purchasing to land contract and construction delivery. So essentially what it looks like is essentially customers who buyers are given full transparency of the state of affairs of their property, and then essentially smart home will deal with the robot home will deal with the management of the property. Support for sale and reinvestment. That's good. Support owners asset building and promote distribution within the platform. Consultation, sale, new property second, search, purchase. Okay. So this is better than what this is something that's better than what Tanaken had ever built. Tanaken talked about doing it. This is in 2021, but this is actually, this does look like a comprehensive system, which is good. Management of documents. Quick search of vacant rooms on the site allows agents to find tenants more efficiently. Okay. So I guess as they get bigger, right, the more people will be using their platform is the idea. Oh, 8. So okay, these are good results, right? Like a growing agent base, company guaranteed units. This might be some insurance function here. Walk around cleaning. Number of times maintenance tasks are performed. Firefighting inspection, restoration work. Deployment on a nationwide scale, careful selection of areas in high demand, leveraging technology to develop high quality financial products. Price of robot homes products developed mainly in 5 major cities and ordinance cities. Careful selection of areas, both of which are within 5 to 10 minute walk. That's the same thing as Tanaken. Introduction of many facilities popular among residents. Differentiation from the surrounding real estate through IoT adopted as a standard feature. I mean, that's overhyped a little bit. Environmentally friendly architecture. We don't care. Development in carefully selected locations. 5 to 10 minutes. Yep. I've seen that before. To me, rental housing differentiates through IoT. Okay, indoor monitor, universal remote, open closing sensor, smart key, intercom, home entrance, outdoor camera. I mean, this is standard, this is standard, this is standard, this is maybe standard, this is standard, maybe this is standard. So like really 3 items maybe on here that are kind of technologically, that aren't standard maybe, Provide next generation DX rental housing. Allow users to confirm a visitor and lock the door with a smartphone, even from outside home. Okay, this is something that's a little more valuable, I guess. You can let people into the unit. But again, this is like nothing really like new. If you look at, yeah. It looks very standard. Like this is like just way overhyped. Like what the fuck? Like yeah. Outdoor secure camera for effective crime prevention. Okay. Suspicious people. I guess in Japan people do stalk people, so having a camera is nice. I mean, some yeah. Robot cleaner, operation of air conditioner, operation of TV, operation. I mean, yeah. Even busy people can make inquiries using the chat. Even those who work in the daytime cannot. Image transmission is more convenient than the phone when. Yeah, ultimately, is like which platform have you used, right? I think the idea behind this is okay, if you've used Robot Home's platform, right, and you were a former investor in Robot Home, and you have, you procured land, and then you build up a property, and then now you use their platform. By having this platform in the future, they're more likely to invest with Robot Home than it is with another place because you know how this app works. And if you're like an older gentleman who's in his 40s plus and isn't as, doesn't want to deal with that type of stuff and have to use multiple different platforms, then this does provide a level of stickiness that I think is reasonable. But the tech, the AI, that kind of stuff, the DX, those type of throwing lingos around is kind of just, in my opinion, just way overhyped. It just sounds like more than it is more than it actually is. Okay, so what are we trying to figure out now? We're trying to, let me take a look if there's any revenue breakdowns, please. Okay. IoT. Segment profit for 1/4. 1/4. Dropped quite a bit this year. Why? Goods and services transferred at a point in time, so 2.5. Okay, so income generated by contract with the customer dropped by half in the Robot Home business. Dropped by half. IoT also dropped by half. Well, dropped by like 30%, 40%. Doesn't look good here. What are they saying though? What's their full year forecast? 1.4? Okay, let's quickly, I'll quickly do a enterprise value calculation. Oh, and we are on 1.35 now. Last quarter is Q1. $150. Wait, where's the share? Okay, we got the share data here. Cash. If investment securities. Oops. Debts. Get more cash than debt, which is good. So if they forecast 1 point, that, right, as their operating income for the year. They're not that cheap. 6.7. You have a recurring base. So I guess the angle is then, what is the value of the recurring base? And let me take a look at Q4. What is there like that doubling, right? Like 24,000. Like really curious what it is that what are all the instances of which this comes up? So increase the managed properties. They manage 600 properties right now. Recurring income domain. 54. And then they can make 450 gross profit off of that. I say half of that is operating income. So 220. Put a slap on a 10 times multiple on that, so it's around 2 billion, and then you determine 9 billion of enterprise value. So repaying, is it fair to pay 7 billion for their construction business? Five five eight. Okay, 1.3 is recurring. Last year operating profit. But what is losing? What was last year's operating? Hold on. 1043. So some segment is losing money, right? How does that happen? Because if this is an entire company, what about segment? $262. 262. But how can this be 2.4 then? Yeah, how's this 2.4? Okay, everybody, I'm gonna need to take a quick. My mouth is feeling dry. I'm gonna take a quick 10-minute break. Have been streaming for around almost 3 hours now. So yeah, I'm gonna quickly take a break and then come back refreshed, and then continue the stream. Okay. Hello, hello. All right, I'm back, guys. I'm back. If you guys don't mind, I have like a plate of egg and Papago drink for your throat. You guys don't mind while I'm doing this stream? I'm gonna be doing some eating because I have not ate yet today. So, yeah. Okay, so what I'm trying to do right now is a sum of parts analysis, right, to determine like how undervalued this company is. Because I remember when I did Tanaken back in the day, essentially their leasing business was so high quality, just the leasing business by itself made up like almost 2/3 of its market cap, right? And so you get basically all these different lottery tickets completely for free. That's what I loved about the valuation. So the Shinikin back in the day was like a plus slash S tier investment in my eyes. Um, what I'm trying to figure out here is like some of the numbers just don't make much sense. I'm trying to figure out why the operating income was 1.4 billion, and then like how comes in some sections it states that the operating income from certain segments are so damn high, which just doesn't make much sense to me right now. Are there consensus estimates? No, there's not. Okay. Okay. Yeah, so we determined 9 billion, so it's 9 times EV. But then is there a chance that things can grow? Because it says it's going to grow to 1.4. If it goes to 1.4, that's around 7 to 8 times EV EBIT. That's essentially what's happening here. Thank you. Thank you, 8. Glad to be back. Let's search operating income real quick. But let's just look at the fiscal year 2024 figures real quick. Perfect. So, wait, how do these numbers make sense? How is it possible that operating profit is a billion, and then you have IoT is 262 in this? Like what? Like those don't even add to 1 billion. That's why I was confused. I'm like, what the heck am I looking at right now? Let me search 2410. Yeah, like what the heck is this? And it's a million yen too. Unless there's something I don't know about flow income. This part's pissing me off a little bit. How can operating profit be this, and then AOT generates this much, and then robot home generates this much, but then operating profit, like, that should be like 2.6 then. It's not. What the heck is going on? Okay, we're gonna download their they have a financial statement. Yeah, segment profit, we have it here too. Adjustments. 2, 3, and 4. The adjustments of segment profits or losses mainly represent company-wide expenses which have not been allocated to each reportable segment. The adjustments to segment assets represent company-wide assets, mainly cash and deposits, investment securities, which has not been allocated to each reportable segment. The adjustments to depreciation and increase in property, plant, and equipment, intangible assets represent depreciation of and an increase in company-wide assets, which is not allocated to each reportable segment. Okay, we understand now. These are company-wide expenses that have not been allocated. Okay, moving on. Okay, yeah, so it's basically, essentially it's valued like this right now. 6.7. Is that an A investment? The thing is, I wish what the pure segment profit of of this one is, and one is, like, is the majority of this coming from this, or is the majority of this? Well, it can't be coming from this. But that is annoying. Okay, I'm gonna just say that this is 1435. It's not bad. It's not bad. Don't get me wrong, but it's not an A yet. It's not an A. Damn, how many have we done today? We've done fucking 9 already. Jesus. Okay. Next company, Green Energy and Company. I kind of just want to skip it based off of that title by itself. Decarbonization. I'll give it like a 1-minute shot. I don't think this is up my alley. Yeah, skip. Skip. 1436. Let's skip this. Don't even bother. Next. Next, a company. Gifu Landscape Architect. I just want to look at all the construction companies and just skip through all of them. I think the 1-4 title ones are all just fucking construction companies, probably. Design, maintenance, landscaping, greening works, and the key for landscaping and greening works. Jesus crap. Okay, I'll quickly take a look at that too. I don't see much promise in this one either. 1438. Health site user. Okay. Did he say on Twitter? He probably said that on Twitter, right? Yeah. Oops, wrong company. Golf resorts. Okay, interesting. Profitability. Okay, increasing profitability. Okay. Okay. Terribly depressed, all these multiples. Times PE. Yeah, it doesn't look cheap. Nope, definitely does not look cheap. I'm 4 billion. 4 billion. How much do they generate? 10 times 430. Nah. Nah, skip. This is not going to be an A ever. 1438. Bye bye. Sayonara. Next. Yasui. Yasu. Yeah, this doesn't look good either. What is this even on there? 1439. Oh, it's not even on here. If it's not on here, then screw it. You know, like. Yeah. Okay. Next. Ishi. Corporate marketing to governments, local governments, while fostering the information magazine Jichi Taisushi. Government news. Bakuma. This one also doesn't look promising. Okay, well, I'll look at it. 143A. 143A. Oh, good margins though. Oh wow, not bad. 2 billion. So if it's worth 2 billion, when was this company even put on the market? 1 year. Just went up substantially. 147825. Huh, okay. Could be something here. LTM 175, 2 billion, 10 times? How about revenue generation? Annual. Increase 20%. Skip. Skip. Forestry. It's not looking good, guys. I might get screwed over today. Renaissance Electronics. I might give that a try. Because it's not looking good right now for me. Yeah, let's take a look at my Okay, we will. Interesting. 6723. Let's take a look. What's the news on it though? What the heck? Okay, let's look at the. Okay, so this is what I'll just share it. Okay, this is what Caruso said. Okay, so despite being known for deep value, you aren't afraid of tech. It's 15% of a Causeway international value, but double the category average. What do you see value there? We're advocating anything to do with the automotive related semiconductors. The automotive area is under so much pressure due to tariff supply chain issues and slack consumer demand, which may become worse if prices go up. Maybe the only glimmer of hope is in the Chinese electric vehicles. But the market has derated some of the world's best automotive semiconductor stocks to some of the lowest valuations we've seen in the full cycle. One example is a Japanese company called Renesas Electronics. It's got a 22 billion market cap. It makes microcontrollers for autos in battery management, microprocessors for advanced driver assistance, and safety systems. Our point with companies like Renesas is that the intensity, the amount of content per vehicle, is rising because autos are becoming more like software. We used to think cars are a hunk of steel. Now they're highly sophisticated and on their way to becoming more electric, if not fully autonomous, which is why semiconductor content is rising so rapidly. My car, which is an electric Audi, is in a nanny state. It tells me if I'm swerving or wants to change lanes for me. Pretty soon it'll be sitting in the back reading. Renesas also made semiconductors for initial automation, data centers, EV charging facilities, so they're not entirely auto related. But it makes up 40% of the revenue right now. Okay. The stock is currently trading at 1749, which is about 15 trailing 12-month earnings, but we think those earnings will recover rapidly, meaning those a lot of potential upside with the multiple increasing dramatically. We see it trading at a slightly higher multiple of 15.5 times 2 years from now, with a price target at 3,200 yen. It's funny that they say 15 times earnings and now they want it to be 15.5 times. It's basically the same shit, bro. But okay. Sure. 2723. Let's take a look. Sorry, 6723. So it can go up 70% from here. Hello, Chris Hutchison. Welcome. Thanks for joining us. We are currently trying to hunt down an A-tier stock, and I've gone through like 13 stocks by now, 12, 13 stocks, and I still have not found one. So, and I made a promise to not end the stream until I find one. So I am kind of screwed right now because it's extremely late where I am. But you know, for the sake of this challenge, I will not give up. I will not give in. Okay. Recess 1911. So I said it was worth. It was trading at 1700 when it first pitched it onto that tweet. Return on assets low. Return on equity decent. Really nice EBIT margins. Last 4 years. Really good profit margin. SG&A increase in SG&A. Net income. Not bad. Not bad. Enterprise value. Oh, they have debt. Oh, they have debt. They have a lot of debt. They had debt. Price has gone down. 3 billion net cash. Around 1.2 in that market out. So 4.4, roughly 4.4. Enterprise value. How have their sales increased? Last 3 years increased substantially. Okay. So they were at one point were 4.48 billion enterprise value. So even if peak fiscal year 22, this is like 10 times. But now this is close to Around 13 times, yeah. So PE. Or P of 10 times. So maybe they had some new earnings that's having reported. Oh, we have 6 viewers now. That's awesome. Welcome, whoever just joined us. What I'm thinking through right now is essentially semiconductors is really not really in my circle of competence. Like I know briefly in generally what it is about, but then thing is, do I know enough to have like a really good stance on it? Probably not. So although like do we know what like a normalized type of rating for this company should be? You know, like I don't really know the issue. And the PE will trade lower than the EV to EBIT because of the mountain of debt that they have. Yeah, I'd say this is not in my this is outside my range. Did I already reject this one? 14443. No, I have not. Okay, let's quickly look at this one and see if I can quickly reject this. I'm dying, guys. I'm literally dying right now. You guys better be subbed. You know, just to compensate me a little bit for my pain. You know. Oh, not bad. ROE is trash though, so they also have a lot of cash then. That's what that implies. Cash and debt. It's 3.4. Yikes. That doesn't look good. That looks terrible. Can they mean revert? What did they do again? Engages in construction business related in Japan, also involved in the manufacture and sale of wave dissipating root blocks. Oh, to prevent tsunamis, okay. Landslide prevention work and radiation shielding interior work, leasing and sale of circular steel formworks and construction materials. I'm just gonna skip this. I don't see potential here in finding an A company. So skip. Niso engages in the reform business, including restoration, repair works for rental properties, mainly in the Tokyo region. Okay, also handles exterior wall works. Small and mid-sized real estate firms are the main clients. The core business is restoration for interior, exterior, kitchen, bathroom. Enjoys stable and continuous orders by dealing with small-scale repair works. Okay, restoration 50%, renovation 37%. ROE, ROA is really low. Okay, I'm just gonna put this in here. This doesn't look very promising either. Oh, skip. Easy skip. Oh, Lee Leia. Lee Leia. I think I've seen that before. Skip. At this point, I might as well start a new line for things that I'm, skipping out now. Might as well, yeah. Golly, can deal. Gym is calling me even though it's not fast food. All good, man. You go to whatever gym you have access to, man. Yes, I'm trying to find an S tier, bro. Trying my hardest right now. Crap, like how many have I already like gone through today? Like I've gone through 14. I've rejected 14 companies already. Jesus. Okay. Interior repairs, sales haven't grown, operating profits stay stagnant. Skip. Yeah, I'll quickly look at the multiples. When the multiples look attractive enough, I might be able to just do it, but like, Jesus, it's gonna take forever, bro. Nope. Doesn't look good. No, skip. 1446. Skip. Doing a lot of skipping today. SAAF Holdings. IT book with us. Strong IT consulting for government agencies and something holdings. Literally, the company's called Something Holdings. Engaging in wish. Ground survey, improvement works, residential. Okay, so they have consulting, system development, human resource, ground investigation, and improvement is the majority of the revenues. RERA really low. Okay, probably this is going to be a skip again. 144. Tough. This is very tough, everybody. Okay, that looks trash. What? Oh no, get the hell out of here. Jesus Christ, what is that? Is there a hell tier? Is there like a, a Z tier? That goes to Z tier, bro. The heck is that? Okay, next one. Fuji, Japan. Okay. Changes in refurbishment work related to exterior walls of houses based in Hokkaido. Wow, that's niche within a niche. I'm gonna say no because it's like what are these margins, bro? What are these negative ROE, negative ROA? God damn. Sure, go out at 8. Throw it out there. Throw it out there. Fuji, Japan. Okay, trash. Little trash. And yeah. Get out. Why are you giving me hell here? It's like they not only did not get better, they got even worse. What is this? Tanaken. Building demolition works and management of various related works based in the Tokyo metropolitan area. Doesn't ROE is good. ROE is good. Demolition work. Demolition might be interesting. You know what? Demolition might be interesting. 1450. Come on. Something show up as promising, bro. I need something promising. Ooh. Okay. Guys, this is not a drill. It's not a drill, guys. Oh, guys. Look at this. Is this it? Is this it? Did we just land on something? I think we just landed on something. Oh, please, I want to sleep, guys. I want to fucking sleep. Tanaken engages in construction management and demolition work of building structures and related construction work in Japan. Also undertakes demolition business, soil and underground remediation, self-engineering work, and recycling business. This company was formerly known as Tanaken and changed its name to Tanaken Inc. So you went from lowercase to capitalized. Okay. The company was incorporated in 1982. Yeah, okay, whatever. Fuck out of here. Next one. Mention Kubota. Oh, I'm invested in Kubota. Yeah. Wait, am I invested in Kubota? Wait, 1 second. Let me double check that shit. Let me just double check that. I may or may not be invested in Kubota. let's see. No, I am not. I'm actually invested in Takeuchi 6432. Different company. Yes. Okay, well, I'll put Kubota in the list, but like, let's do Tanaken first, because this was looking a little bit, this got me excited for a second, you know? Blood flowing, testosterone pump, no. Yeah, man. Oh, is there English? Is there English? Yo, if there's English on this? Okay, we're gonna do some translation, guys. Listen to some. Sorry, the music isn't connect, but I'm gonna listen to some of my own good music. Actually, can you guys hear it now? Maybe now you guys hear it. Maybe now you guys can hear it. Let me reset it. Can you guys hear the song? Maybe now. Yeah, nice. How is it? Am I the only one feeling it? Oh, a bit loud? Okay, let me reduce it. How about now? I'm minus 10 decibels there. Should I go lower? More chill vibe. How about now? How's it sound now? Should I have to lower it more? Okay, this is minus 15 decibels, guys. How does this sound? Is it still a little annoying? Keep in mind, this is like copyright-free music, so this is like stuff that I found that I won't get striked. So, you know, yeah. Okay, translating. Let's go. Fresh out the oven. Okay. Let's take a look at this. So let's quickly calculate the enterprise value. Why do I do this to myself, guys? Seriously, like, do I have a death wish? Is the volume good, or should I lower it even more, guys? Here, this is minus 20 now. It's minus 20 now. Let me know if this is still distracting. Getting mid 90s GeoCity vibes. I have no idea what that means. But this is like okay, so the playlist is from I can share it. Give me 1 second. It's Stream Beats by Harris Heller. And let's see, the album is called Sakura Dreams. So let me get a link to this here. Okay, I'll share it with you guys if you guys are interested. Here's the Spotify link. If any of you guys decide to do live streaming, like this was apparently music that is, yeah. All right, back to calculating EV. Let's go. And let's go. Last quarter, this was fiscal year 2024, I guess. Let me just double check here. And I'm not affiliated to this in any way. This is not for money. This is purely something I just found. So, plus I'm too small to be affiliated anyway. So, oh, they're on fiscal 2025 now. Okay. What is the share price? $1,344. These are hand-picked songs. Are you guys happy? I hand-picked them myself. Cash. Okay. Anything for you, eh? Okay, liabilities. Okay, nothing there. No short-term debt. No long-term debt. Okay. Please. Buddha, God, whatever is out there, please let this be the one. I really don't. 4% dividend. Oh, they had 80 before though. They had 80 before. Interesting. Oh, they had a 2-for-1 stock split, so then okay, so this is like 110 off of the previous price. They estimate 1.7. So if we do nice 4 times. I like low single-digit multiples. Also, always good. So please, okay, for this to be A tier, it's very simple. It's very simple. Please let revenue be growing. Okay, or have a decent profitability. Like that's all we need. That's all we need right now. Please don't screw me over. Okay, not bad. So revenue has grown in the vicinity of like 2/3, 66%. Gross profit doubled. Revenue increased 66%, but then this gross profit doubled. Nice. Operating income doubled. Nice. 1 billion. PE of 7 times. Right? Yeah. PE 7 times. I like that. Okay, might as well fill in the other information while I'm at it, because let's figure out what this company does first and whether I can actually say like I like what I see. I like what DNA. Oh, cash flow. Oh, Mamma Mia. What did they do again? That's low as cap depreciation. Barely any capex. What is this company? What the heck? They have like no capex, no capex, no depreciation. This is awesome. What is this? Okay, let's just assume 50, because that makes my life whatever. Oh, thank you. Yes, very nice. Thank you, 8. You get a shout out for that. Thank you. Okay, if you look at the cash flow statement, they have one. Hopefully, they do too. That'd be nice. Excusez-moi. Please, please, please don't screw me over. This looks promising. Looks pretty damn promising right now. No cash flow statement. Oh, there is. Okay, good. Yeah, so on average, you don't spend that much a year in capex. So there's one big year of capex. Intangibles not a lot. What is this company? This is great. This is negligible. Assume the 30% tax rate. That's a negligible amount. That's nice. Nice. I still like what I see. Okay, now let's dive into the actual company here. Okay, what is you do? What is it that you do? Yeah, let's review the company profile. Oh, it's gone up. What? 800 to 600 plus 25%. 34% recent. Oh. Oh, demolition. Demolition is a good business in Japan because let's say you live in the rural cities and you have a let's say your parents passed away. Most people in Japan don't even go through the effort of like refurbishing their family home. They just rather let it rot there. And if they do sell this out because the unit is so old, people typically demolish it to rebuild new there. So demolishing business is pretty good. Further lower the music. Case is distracting. Let's take a look at this. Okay, business model. Let's see here. So, what is it? Trust based on consultation referral cycle. Consultation starting from the efficient sales cycle. Consultation, project preparation support, safe and secure construction, highly rated. Because they're highly rated, they lead some more consultation. Okay, partner companies lead cooperation. Consulting financial institution, business partners, case introduction. Efficient sales cycle based on consultation. Highly rated for safe and secure construction management and courteous neighborhood support. A cycle of consultation and customer introductions based on trust. Improve. Okay, although sales. I'm gonna turn off the music real quick. Distracting myself. Okay, so although sales fell short of the plan due to factors such as delays in the start of construction for large-scale projects, profits were favorable due to factors such as improved productivity as a result of large-scale production projects. Sales and profits increased compared to previous fiscal year. Due to the tight labor supply and demand situation in the construction industry, recruitment was sluggish and fell short of targets. Okay, sales increase 16%, operating profit only increased 7%. 100. They have 102 people in. 141 people. Only entire company is 140 people. Wow. Okay. The company has no interest-bearing debt and a high cash position. Also maintains a favorable financial position with an equity ratio of 72%. Has the capacity to raise funds. Existing borrowing limit of 4 billion yen. So they can borrow roughly a third of their market cap almost. Order status. Due to solid order environment, orders received for the current period were 13.3 billion yen and orders carried over were 8.1 billion yen, progressing smoothly. The scale of construction projects we receive is increasing due to our credibility, technical capabilities, and financial standing, which are based on safe and secure construction. In addition to existing clients, we will focus on redevelopment and new developments to further increase. What is their book value? 1.4. A lot of orders. Period. Orders received 13 billion. Completion amount for the current period. So carry forward is 8 billion, so very good amount. Sales strategy. Main measure. Incorporating urban regeneration projects. Plans to expand orders by focusing on receiving orders as prime contractors, mainly for large-scale urban renewal projects, such as redevelopment projects, commercial logistics centers. Good. Strengthening customer base. Aims to further expand its customer base, attracting new customers in addition to existing customers, such as developers, general contractors, and end user. Increasing order for underground construction. Plans to focus on receiving orders for underground demolition-related construction, pile removal, CD method, BG method. I have no idea what that means. Underground damage countermeasures, pouring liquefied soil, measures against spring water. Order for environmental improvement related construction. We'll cooperate with partner companies who will actively respond to the anticipated increase in asbestos removal and soil contamination. Measures, countermeasure construction, and aim to capture demand in environmental improvement field. Information management and human resources. Okay, whatever. Major initiatives and results. Increasing the valid Tanaken brand. Strengthening human resource, strengthening construction management system, strengthening technological development. What is that? Develop safer construction techniques for existing methods and develop new construction method. That's bullshit. DX enhancement for demolition. What the fuck are you talking about? Okay, skip. Strengthening the business model. We have built an efficient sales cycle based on consultation based on safe and secure construction. On the other hand, there's a need to continue receiving orders. It is a flow business and the stock is something. Focus on consultation-based proposal sales with medium to long-term perspective, 2 to 3 years ahead. By maintaining and expanding the stock business opportunities on a continuous basis, we will be able to secure stable orders. The balance of business opportunities will be maintained at over 4 billion yen. Sales by customer and contractor. There will be no change to sales operations to focus on developers and end users. Separate orders are also on the rise, but orders from general contractors due to large construction projects are also on the rise. Developer, general contractor, end users, union. I don't know what union means in this instance. Sales by destination. Contract. That means sales by destination. Yeah, so like general contractors increase substantially after a bad year, and users sales by contractor. I don't know what destination means. Main contractor rate and repeat customer rate. Oh, a really high repeat customer rate. Developers, end users, and redevelopment remain strong, and prime customer contractor rates remain at high levels. The dimensional work based on safe and secure construction has been well received, and repeat customers are also going well. Good. Repeat and new customers. Wow. Prime contractor, subcontractor. So I'm not really familiar with like these contractor terms. Prime contractor, subcontractor. I'm gonna ask a dumb question. Okay, I understand now. Okay, I see. So they're mainly hired by private contractors, directly, and then yeah. Good. Number of construction projects by scale. Okay, so majority of them are 50 million yen or less, so that is 500k or less. Over a million is the second biggest category, and then it's between 50 and 100, which is interesting. Number of construction projects by construction. What is this? As construction projects become larger, the number of projects with construction periods of 3 months or less have decreased significantly in recent years. Okay, so because they have larger projects, that they take more time, essentially. Okay, so 3 months is the bulk of it, and then the second one is more than 6 months, but less than a year. Okay, interesting. Medium-term plan. I'm interested in this one. Is a 3-year plan for building a foundation to realize long-term vision, looking 10 years in the future. So, foundation building, growth strategy, industry leader. Expand one-stop consulting capabilities and become a company that companies can trust in the future. Using accumulated know-how and develop new technology to realize safe construction that takes the environment into consideration. Secure our position as a leading company in the industry, focusing on redevelopment and large-scale projects under. Increase the value of Tanaken brand, enhancing the quality and quantity of human resource, strengthening technological development, and that's going to be hard. Expansion of alliance and digital transformation strategies. Don't see it. Okay. Overview of the plan for the 3 fiscal year ending March 2026. Although the order environment is strong, there are concerns about rising costs due to the impact of labor shortages, so sales and profits will remain in line with the medium-term plan. Hiring of personnel is sluggish, so personnel plans will be revised. Tanaken, in addition to increasing awareness and understanding of the brand, aims to secure talent by expanding recruitment channels. Sales strategy. Hmm. 30% dividend payout ratio. What's their dividend yield? I think it was quite decently high actually. 4.1. So if they have a 30% dividend yield, then a full dividend they could pay is 3.3 times that amount. It's 13%. Interesting. No, very healthy company, honestly. Very healthy. I don't really see much wrong with it. Okay, let's review the overview. In the construction industry to which our company belongs, costs remain uncertain due to rising construction material prices and tight supply-demand situation for skilled construction workers. In demolition work, the order environment remains strong due to an increase in aging buildings, correct, that were constructed during the period of high economic growth, urban redevelopment, and the active rebuilding of condos. In this environment, the company has clarified its vision for the company's 10-year from now in its long-term vision, Tanaken Vision Next 10, which envisions further growth towards the school company's formulated a medium-term plan. Next phase, fiscal year 2023 to fiscal 2025, primary phase and 3-year plan for building a foundation to achieve further growth while maintaining growth trajectory. The fiscal year end March 2025, based on the improvement of the working environment through the relocation of the head office, the company aims to increase the value of Tanaken brand by focusing on branding strategy to increase awareness, including the company name change. I mean, these are really lackluster efforts. As a result of the business performance, where sales were up 15%, operating profit up 48.5%. So there is operating leverage. The order backlog is ample due to a robust order environment. And although the start of construction on large projects was less than planned due to the impact of delays in development projects overall, the increase in large-scale construction work led to improved productivity in sales and profits, which is true, right? And instead of doing all these small projects, you do a large project. Of course, the margins will be better. Future outlook. Okay. Although the outlook for the Japanese economy remains uncertain, the demolition market is expected to remain strong due to a trend toward prioritizing the demolition of old buildings without waiting for construction project plans from the perspective of crime prevention and safety. In our long-term vision, Tanaken Vision Next 10, which looks ahead to further growth in 2023, we have clarified where we want to be in 10 years' time. To achieve this, we have formulated our medium-term management plan, Tanaken Vision Next 10 Primary Phase. Primary Phase is a 3-year plan for building a foundation to achieve further growth while maintaining our growth trajectory. The fiscal year ending March 2026 is the final year of the Tanaken Vision Next Primary Phase, based on improving the work environment. Okay. I don't believe in the brand shit for the demolition. It's literally a demolition company. Like, you're not fucking Coca-Cola, right? For the fiscal year end March 2026, we expect sales of 14 billion, based on the amount of construction work carried over from the previous year. Of 8.6 billion, 8.16 billion, and projects currently in operation. In addition, we expect operating profit of 1.7 billion yen due to implementation of above measures, including building foundations such as strengthening personal recruitment. Pre-demolition. Yeah. What is pre-crime is so 2002? Sorry, I didn't get the reference. Okay, this looks pretty standard. I mean, unless I want to look at their next. I mean, do I need to look at their next 10? I mean, so far it looks pretty decent, honestly. This company, so Revenues are probably going to go up. There's continued demand from demolition, so there's a tailwind from that. Yeah, margins are healthy. ROE is healthy. Multiples are very low. I guess we can look at the historical multiple. Like, okay, price of book. Yeah, so it's trading above price of book right now. Like, previously it was even cheaper. 3 times. But right now it's not bad. Pre-crime crime prevention by arresting people before they have committed a crime. Oh, I see. Yeah. 2.8 times. Yeah, right now. 3.3, 4.7. W. Yeah, price has gone up to 11 billion. One of the historically high valuation. I guess what's nice is it has a 4% dividend yield, so you have that safety net. But if it pays out all 100% of it, you get a 12%, div yield. If this was 1,000, this would be really nice. Like it was previously trading at this level. Yeah. Oh, okay. I'll only drop to 1,200 this year. There's also a catalyst of like Japan is also like basically giving. There's some really cheap houses in rural areas in Japan where you can literally buy them for like so little. So you can probably buy land for really cheap, demolish something, and build something. I do want to take a look at their next 10 years thing. I think that's interesting. Mid management, term management. Okay, this is important. I will quickly translate that. 10-year plan, 145. Okay, 10-year plan. Let's take a look. I wish there's some like macro data. I want some macro data on, where demolition trend is going and achieving sales of 200 billion yen. Wait, is that over 10 years? Huh? Oh, that's over 10 years. Quickly. So they're currently generating 2018. So they need to be on like a growth trajectory where they're generating more than that, which is what they're doing, I guess, right now. Currently at 12. I'm clearly go through this so that I can see what is the upside here, because that's what I'm really concerned about. Because if there's good enough upside, I don't mind paying up on the multiple, right? Nothing I'm not aware of, like other demolition companies. Okay, construction investment of 68 trillion 4,300 billion. Yeah, if this isn't Japanese, it would be easier to look at. Let me open the Japanese version as well, so I have a comparison here. So this is line number 8. Holy shit! Okay, it is actually that. The prime contractor demolition work market is 2.769 billion yen. The degree of this trend will continue expected to increase. I believe that's 276 billion. So it's 277 billion yen. Actually, 277 billion yen. 2.7 billion market. 2.7 billion in sales. So there's 277, right? And they take up 12, let's say, or 14. So that's 5%. They have a 5% market cap then. There are over 60,000 licensed and registered building demolition businesses, but there are only a few companies that primarily engage in demolition work and have sales of over 100 million yen. The industry is dominated by small scale companies. Why don't they just acquire them? That seems like a number of demolition business licenses and registration. What the crap? 60,000, yeah. The 2019 industry category has been changed to demolition work since the establishment of the new system. Demolition work permits have been issued. The number of registrations is rapidly increasing. Over 10,000 companies fiscal year it has become. As a growing market, there are many new entrants. Competition is expected to be fierce. What are these question marks here? What the crap? Okay, I'm gonna use Google Lens for this part. What is this? Number of demolition work licensed contractors. So licensed contractors there. Okay, 60,000. 60,000. So it's gone up over time. So it's 30,000. So they mean 100 million yen, like a million yen. Oh wait, hold on. You're right. This is 10 billion. This is 10. This is 10 billion. This is not million yen. This is 10 billion yen. So they're saying there's only a handful that exceed 10 billion yen. They've already exceeded it. So yeah, this is not 100 billion yen. This. Okay. How do I put this? This figure in kanji is 100 million. Okay, so there's 100 millions. So the easiest way to calculate this is just move the decimal place one to the left, and that's 10 billion. So if you have 10 yi, so in Canto this is yi, in Mandarin is yi. So if it's yi, so 1 yi, that's 100 million. If it's 10 yi, that's 1 billion, and 100 yi is 10 billion. Okay, just for clarification. So this is not 2,769 billion. This is 277 billion. Just to let you know. Oh. Yeah, this translation is kind of trash, but you're gonna have to. That's why I'm like comparing it back and forth, the Japanese one. Okay, outlook for the demolition market. Since concrete buildings are demolished, oh my gosh, what is this bullcrap? Okay, I'm just gonna have the side by side now. That's probably easier. What are these figures? Okay, are demolished 40 to 50 years after construction. We assume that the annual demolition market depends on the number of buildings constructed 45 years ago. Based on this premise, like you calculate to the construction investment amount, non-residential. Non-residential 5 years ago over a 5-year moving average and graph the trend in the demolition market with 2023 as a fiscal year. Ministry of Land Infrastructure Trust. According to this, market size looks to grow by 115. 15% increase? What? Okay, hold on. I need to translate this part. 1 second. What is this? Let me just. Okay, let me open Definer. Can I open this? Of a bit. Oh, hallelujah. Okay, I'm gonna put this into ChatGPT. God, it really can't register the numbers here. Oh, it can't. Nice. Okay, so it says, assuming the concrete buildings are typically demolished 40 to 50 years after construction, the annual demolition market depends on the number of buildings constructed 40 to 50 years ago. Based on this assumption, we calculated the construction investment amount non-residential 40 to 50 years ago using a 5-year moving average over time and created a graph showing the trend of the demolition market using fiscal 2020 as a base year. Based on non-residential construction investment data from the ministry, blah, blah, blah. According to this, the market size is, in fiscal year 2023, 40 years later, is projected to be yeah, I really want to know what the heck this is. Because yeah, I need to know exactly what this part means. The trends in the demolition are graphed based on the fiscal year. But what about the 100 though? There's 100 right here. Jesus crap. I wanna. Okay, I'm gonna manually put in these numbers to see what it's. Oh, this is what it means. We graphed the trend of the demolition market using fiscal year 2023 as a base year, indexed at 100. So it's indexed at 100. So 3 years later, 25 will be 115. So increase 100. So 15% increase. Wow. Okay, let me just quickly insert this into ChatGPT as well and replace those pesky signages with actual numbers. Is 20 here, 5, and this is 140, 3. Okay, so the medium-term plan primary phase is positioned as a 3-year plan for laying the foundation, focusing on building a strong base in human resource, technology alliances, in anticipation of future expansion of the demolition market. We have set sales targets of 12 billion yen for fiscal year 2023 and 40 billion by 2025, aiming to maintain our current growth trajectory. Wow, so this is in a growth stage, right? So if we're in a growth stage, right, then this business is gonna do well, right? It has tailwinds and it's trading at low single digit multiples, and it has no debt. That's awesome, right? Yeah, that is pretty awesome if you ask me. 344. Missed the mark a little bit. The 12 and 13, right? Missed the mark a little bit. Oh, they deleted by year, actually. They missed the mark completely, actually. Yeah. Yeah. But what's the market growth rate? Does it, the market's gonna grow to 200 billion with this as index portion. So it's gonna double. Oh, no, as an index, it's gonna double. So currently it is sitting at double in how many years? Double in 11 years. Okay, so if it's indexed at 2 times, right? Like if you think about, okay, let's think about this. Let's do a really easy, test here, right? Like, it's gonna slowly activate and then accelerate, is what it's saying. So let's think about what this company can turn into, right? Like if this is the round, it's gonna index at 2 times, but it's gonna momentarily go to pretty stable here, 1.5, 1.25, 1.5 by 2032. So we're 7 years away from that. 150. 150, and it said the market size is 277 billion, right? Then okay, let's do the quick exercise there, real quick. The market's currently 277. By 2032, is going to grow 150%. So it's going to grow 1.5 times. Yeah, if you say 150%. More 15, and then previously we had a market cap of 10. We're getting 15 here. Which year is their base year here? In 23. What was their revenue in 2023? 11. Oh, we had a good year in 2020. Okay, let's just say it's 10. 3.6%. So then what would be 2023? Tanaken. Sorry, 2032. 15. 15 at what profitability here? 15%? I was gonna say 14%. Two point one by 2032. Right now it's 2025. So 7 years. That's not that great. Unless again, yeah, I think it could definitely capture more market share. 5% market share. Let's go to 3. I don't know why this company is worth so little though. Like, yeah, it's boring, but there's a tailwind. It's a clear tailwind for it, right? Although it's kind of like slow, but then like low multiple, decent dividend yield, right? And if it pays 100% of its div yield, it's like generating bank actually. You know, no debt, long-term investment, has cash on balance sheet. It's like, what's not to love here, right? You know, PE is kind of high because it doesn't have a place to reallocate capital and methods that are meaningful. Could they get acquired? Cash 2 times. So they have to use that cash somehow in a meaningful manner, and they're not. Which is the issue right now. I'm just running through some sims in my head right now. Okay, so if it can capture 5% market share, generates around this much, 2.9 billion, 5 times multiple of this. Say 5 times EBIT, be worth 15 billion. So then it's becomes a double in this many years, but then you have a market cap of 11, right? So they better increase their dividend yield over time, or else it's kind of trash. Alright. 2025, 7 years. Goal 72 is that's 10%. Plus you get the div yield, annual div yield. I'm looking for a 14% return. Roughly. It would be nice to buy it cheaper, but this is not bad. This is not bad. Like, a lot of things are good with this company, I would say. Okay, what else are they looking at here? What other things are we discussing this company? Yeah, they either invest or they acquire other demolition companies. They have to use cash somehow, man. They can't just let it sit there. They're gonna do more projects. Oh my god. I mean, developing safer techniques doesn't really it's good for their bad reputation, but doesn't increase revenues, right? Okay, so they're trying to develop new capabilities in terms of the services they can provide. So like new construction, team, on-site IT support systems. Okay, so they're trying to grow market share, I guess. It'd be interesting to know what their historical market share was, right? I think this is literally one report that they wrote in 2018, so it's I don't say a little outdated, but I mean, yeah, all really pretty solid, right? Right now, it's just really just looking at like what is the adequate, entry price, right? Like, if you can get in at this is really good. This is really enticing, right? Like, if you can get in this type of multiple, right, then that can be very fruitful. Yeah, then the question is where does the extra cash go, right? Like if that's not the case, then it's really just it's not even that, right? It might not even be 50%. You might be using this actually, the parameter. Might be shit actually. 7 years, you do what calculation here? 3%, so 7% return. That's kind of crap. Oh, this company is cheap though. What could it expand into? What would mean reversion look like for this company? That's the question. I think I like the margins. Business is solid. Really good ROIC. It's a solid business, but it needs to allocate fucking cash. What are you doing to cash? Buy back shares? Or are you gonna, like, it should, right? It should definitely buy back shares. That would be like instantly. This would just increase the share price. Price to book is over. EV to book is 0.1, 0.9. Thank you, 8. Thank you. Yes, I'm almost done. I think this is gonna be an A1, but it's kind of like could be cheaper, but I think it just qualifies as an A, honestly. Yeah, thanks for tuning in. Thanks for contributing as always and offering your input. Yeah, see you next time for the next stream. Okay. Let's quickly look at the 1,000 would be such a good price. That was last year. 1,000 is such a good price. I definitely put on the radar. Okay, so yeah, this is an A company. We're gonna just lock it in. This is an A. We found our A tier. Okay, 1450. Thanks everyone for like tuning in. Yeah, I'll do a recap tomorrow on it. It's been a long ass day. Valuation wise, like, okay, a couple things to note, right? Like, tailwind wise, it just needs to win some big contract, and if it can do that and actually capture market share, like this could easily become cheap, right? It could also like, hey, we're gonna issue a higher dividend, right? Then it also becomes cheap. Yeah, they just need to utilize cash somehow, right? Like, yeah, 1,000 is where I think this company would be really cheap. Like anything below 1,000, but I don't think it would drop there. It'd be nice if it did, right? But hard to say. Just say. Yeah, good company. Good company. Yeah. Yeah, I don't see huge upside in the price appreciation department, but I definitely see, you know, yeah, like if it can optimize for, and it could get acquired too. If it gets acquired, that's also really good. If it gets acquired, then it's cheap, right? Like you get all that tailwind. There's an acquisition catalyst. There's an optimized corporate governance catalyst, and then yeah, and if it ever gets really cheap, right? Like it's to 1,000 for some reason. I mean, it got to 1,200. Then last year it got as low as 973. 1,000 is just bonkers. 1,000 is just bonkers. 800 goes up to 1,400. Then yeah, so this stock can definitely trade range bound and drop there. So yeah, man, this is interesting. We found our A stock, and thanks very much everybody for tuning in. Where did we leave off? 102. 102. Nice. We finished 9 pages today. That's some good progress. 9 pages. How many companies did we go through? We went through 19. Wait, does that include this thing? Pretty sure that. Yikes, that's a lot. 18. Oh, we also went through a special request on Renaissance, which wasn't really in my ballpark. So, yeah, we went through 19 companies in 4.5 hours. So, thanks everyone for tuning in. Really appreciate you guys, engaging with me in the chat. Definitely gonna get some rest, and see you guys next time. Peace. Oh, we got 48 views today. That is impressive, right? And for the longest period of time after like the 1 hour mark, we've maintained concurrent viewers of 3. So that's really, really dope. And yeah, tune in next time. I'm going to be doing this more often. And then look forward to if you guys haven't subscribed yet, subscribe to my Substack, subscribe to my YouTube, follow me on Twitter. I'll be doing a recap on my Substack about my findings and summarizing everything into a quick post at the end of this week. So thanks everybody. Thanks for tuning in. Love you guys. See you guys next time. Thank you, TS. Thank you, TS. I'll stay on for maybe a few minutes if you guys wanted to say anything. But yeah, if you guys want to get out of being a passive listener or viewer, yeah. Okay, and yeah, for sure. Like if you guys see me, post about live streaming, please like it. Please engage with it, comment, repost, so that people in that you follow can also follow along as well. It's hard to do this and build an audience on YouTube. I currently have 123 subscribers, so any help is very much appreciated. But I'm in this for the long game. I'm in this to really grind it out and try to capture an audience. But any and all help is very much appreciated. All right, talk to you guys later. Peace.